Hey guys, candlestick formations are the most important price action signals you can find on any price chart. Candlestick patterns express various messages and can tell us a lot about what supply and demand are up to. Understanding these patterns allows you to read the next move in the market, and it will help you to make the right decisions. No matter what your trading plan is, applying the candlestick concepts on the chart will improve your win rate. However, the majority of traders do not use the candlestick techniques correctly. In this video, we will show you some of the most interesting candlestick patterns along with the psychology behind them that will change how you see the chart. Then we'll explain how to combine these patterns with other price action trading tools, including key levels of market structure, retracement levels, trend lines, and confluence areas. But the best part about this trading strategy is that you can fully automate it into a bot that does all the work for you. No more wasting time waiting for trade opportunities. It only takes 2 minutes to create the bot. First of all, why candlestick formations are important. The candlestick formations are the early and leading sign of what buyers and sellers are doing right now in the market, which allows us to anticipate their next moves. However, these patterns alone may not make much sense without additional confirmations. To use them effectively, it's important to combine them with other tools like key levels and confluence areas, which we will explain later in this video. First, let me show you a list of the most interesting candlestick patterns that work very well. There are many candlestick patterns that traders use, but the ones we find most effective are those that happen most frequently. Let's start with the first one, a long wick rejection. As the name suggests, a long wick rejection is a candlestick that has a long wick and a small body rejecting a certain price level. This is a reversal pattern, which means that whenever this candlestick forms, we expect the price to reverse from the current market situation. We have a downward movement, the long wick rejection forms, and price reverse. The candle's color does not matter. It can be red or green. From the price action view, the sellers have failed to close another strong bearish candle, which shows momentum loss. On the other hand, the buyers have stepped into the market and immediately pushed the price higher. This rejection signals a possible reversal to the opposite side of the market. Same thing here. The price has pushed up, hit, and reversed, forming a long wick rejection pattern. Again, it shows that the buyers are losing momentum and sellers have stepped into the market, which makes the price reject this area, signaling a possible reversal to the downside. Now on the real chart, we have Eurodollar in the 1-hour time frame. The price has pushed down, forming a long wick candlestick rejecting this key area, and then the price has immediately reversed. As we mentioned earlier, the candlestick formations are strong price action signals. However, they cannot be used on their own but combined with other price action tools. As we witnessed in this example, the support and resistance areas are one of these tools. You could even combine them with smart money concepts, which I will show you later in this video. Multiple rejections. This pattern consists of multiple candles rejecting an area by wicks. Here on the chart, the price pushed down, hit, and drastically reversed, giving us a key area of support. As the price returns to this zone again, we can see that we have multiple long wick formations in this area rejecting this price. This shows the sellers have tried over and over again to break the price to the downside but failed. Whenever the price has gone below this level, the buyers have entered the market, causing multiple wicks, which presents a trading opportunity. Here in the opposite direction, we had a key level of market structure acting as resistance several times. When the price returned to this level, we had multiple wicks sticking out and rejecting this area. Once again, it shows that the sellers held this level strong and confirmed the reversal. Momentum candlestick. The momentum candlestick consists of 2 consecutive candles with the same color where the second candle's body is bigger. From the price action view, it indicates an increase in momentum, which signals movement continuation. Here, when the price reached this level of market structure, first we had multiple wicks rejecting this area, followed by a long wick candlestick, which shows that sellers were unable to push the price lower, and the price immediately pushed higher. Then we have a momentum candlestick formation, which shows that the buyers have entered the market, and the price has gained massive bullish momentum. Now price can continue to push higher, which provides us with a perfect trading opportunity. Now here is a pro tip. In the bullish scenario, if the second candle has no wick on top, it indicates that the buying pressure was present until the end of the candle, which is another sign that the price will continue pushing higher. The same thing for the bearish scenario. The absence of a wick at the bottom of the momentum candle signals massive selling pressure.